Hi, good afternoon. Welcome to the marketplace. Coming up, Bank of Ghana urges public to disregard Cedi speculation by black market operators as it defends interventions to stabilize the cedi.
Base our projections, our perceptions, whatever it is, our doubts and our fears, let it be based on the data. What does the data say? Not what the Alaji says, not what the Zamanama man says, please.
Coming up, Barclays projects local currency to reach 12 cedis by end of year against the dollar. Plus, government says September ending as deadline for approving private sector participation in Electricity Company of Ghana. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. First up, the Governor of the Bank of Ghana, Dr. Johnson Isiama, has appealed to the public to disregard projections and speculations bandied about by some black market forex operators. Now, he warns that such speculative activities do not support the data published by the Bank of Ghana, rather its periodic Monetary Policy Committee meetings. Now, speaking at the Graphic Business Stanbic Bank breakfast meeting, Dr. Isiama expressed surprise that some Ghanaians form the expectations of the cedi from uninformed sources and begin to liquidate their funds out of panic.
The Bank of Ghana must therefore walk a delicate line like we do, managing forex strength without over-tightening liquidity, which could suppress private sector credit and stifle the very growth we seek to encourage. This balance is not static. It requires constant recalibration based on evolving data and market behavior. And for us, we monitor these on a weekly basis. Monday afternoons, we have an economic policy coordination meeting where we assemble all the data. So yesterday in the afternoon, we had that. And that's how come on a weekly basis, we can tell you what is happening in the economy. So it's all about the data. It's evidence-based. So let's all base our projections, our perceptions, whatever it is, our doubts and our fears, let it be based on the data. What does the data say? Not what the Alaji says, not what the Zamanama man says, please.
All right, Dr. Isiama explained that the cedi's gains are being supported by robust external buffers, prudent monetary policy coordinator, fiscal consolidation, and growing investor optimism.
Begin by outlining the facts. And as I mentioned, this type of conversations should be based on the facts. The local currency has appreciated by over 42% year to date, that is as at end of June 2025, and has reversed nearly all the losses that were incurred in 2022 and 2023. Our gross international reserves now stands at $11.1 billion. And as I said, accounting for about 4.8 months of imports cover, which is up from 8.98 billion at the end of last year. We recorded a trade surplus of 4.14 billion in the first 4 months of 2025, with exports growing by over 60%, mainly from gold, cocoa, and oil. And I must admit, given the vulnerabilities that arise when your economy is virtually based on the exports of raw commodities, then you have to take measures to protect against the shocks that could arise. And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. Now, the current account surplus improved significantly to 2.12 billion as at the end of the first quarter of this year, and you can compare that to a mere 66 million during the same period last year. On remittances, inflows remain resilient, even though we have noticed some decline from April, and the Ghana's IMF-supported program has passed successive reviews. As you are aware, the fourth review was just concluded. We have had our sovereign credit rating upgraded, which was very welcome news. We are sure that before the end of the year, there will be further upgrades, and ultimately we should be ready to reopen to the international capital markets. Now, these outcomes represent more than just statistical improvement. They are a restoration of macroeconomic credibility, the kind that markets, that investors, and that citizens respond to with confidence.
All right, London-based Barclays PLC has projected the Cedi to reach 12 against the US dollar by end of the year. This forecast was contained in the bank's half-year report to investors and clients.
The local currency is currently trading at around 10 cedis, 45 pesos to a dollar. This means the Cedi may lose some grounds or maybe depreciate in the coming month to reach this new projection of 12 cedis to the dollar by end of year, according to Barclays. The local currency is said to have appreciated by more than 40% against the dollar. But based on this projection, it appears we may not end the year with not those high numbers when it comes to the Cedi's performance against the dollar. Barclays PLC in the report argues that their forecast is based on the fact that gold export revenue, which has been a major factor for the Cedi's good run, may be slowing in the coming month. It is also raising concerns about the expected government increased spending from the second half of this year and expected cut in the policy rate. But the Bank of Ghana had in the past challenged these projections, insisting that it is not based on current development in the economy.
All right, you're watching The Marketplace. Let's turn to energy matters. The government has set the end of September as deadline to finalize proposals and approving private sector participation in the Electricity Company of Ghana. Here's more in this report.
This is one of several measures that government has proposed to the International Monetary Fund to deal with challenges facing the energy sector and address the rising debt stock, which has reached $2.2 billion. According to documents submitted to the IMF, government has already engaged the services of the consultant that is working on this restructuring strategy that will eventually open the Electricity Company of Ghana to the much talked about private sector participation. It is still not clear for now whether that could be classified as privatizing the operations of the company. The assessment will also look at reviewing the technical and financial operations of ECG. This draft strategy is expected to be completed by the end of June this year, and Cabinet should move to adopt it by September 2025. The management of the economy have also revealed that they are hoping to complete the audit of the energy sector debts, a move that could help in paying debt owed some of the independent power producers.
All right, joining us on Zoom, Executive Director of the Center for Environmental Management and Sustainable Energy, Benjamin, is here for the Tuesday exchange on energy sector matters. Good afternoon to you. First off, how realistic is the end of September deadline for finalizing proposals, and what are the key challenges the government might face in meeting its deadline for private sector participation in ECG?
Thank you. I think that that information will be, or that question ought to have been answered by the executive or the presidency, as well as maybe the Ministry of Energy and Green and Transition, because they have put out, or they have put up a team, and based on the timelines they've given that particular team, they are expected that the team must work within that particular timeline and then complete this particular whole private sector participation in the energy sector, as we call it. I think that from our perspective as SEMSE, I think that we should not rush the consultant because there are evidence of some of these private sector participation in Africa that failed. And I think they failed because of some of these policy rushing. So we should give them some time, and then whilst giving them some time to build a strong policy document or strong policy framework or implementation framework of this whole private sector participation, we also need to address certain critical challenges in the power sector and whole energy sector so that when this particular implementation document becomes ready, we're able to assimilate it or simulate it well in the whole energy sector framework. One is that we need a strong regulatory institution, because in other jurisdictions that we've had a success, for example, like Cote d'Ivoire, Morocco, and Kenya, that we have success with respect to power sector privatization in the distribution sector. There was a strong regulator, a regulator that doesn't have government interference in these activities. So we must make sure that we get a strong regulator, and if we get a strong regulator and the policy implementation framework comes out even by October, November, I think that it will be a success for Ghana.
So how might private sector involvement impact electricity tariffs and service delivery for consumers, particularly in underserved areas?
Yes, I think that in most of these countries that have seen a success, we've also observed that revenue collection rates are very high. And if revenue collection rates are very high, it means that some of this private sector participation or participants will improve service delivery and also improve efficiency by reducing some of these system losses that we're observing in Ghana. And those reductions will also rechannel some of these power into underserved areas in our country. Fortunately, we are doing well. I think if you look at even most of the data that has been channeled by the Energy Commission, underserved areas are even doing about 70% of the total electricity consumption. So we just need a little, about 10 to 15% to even catch up at universal benchmark. So in terms of redistribution of electricity in Ghana, as a country, we have done very well. I think the major challenge has to do with the sustainability or the debt sustainability of the sector. And we think that privatization is one of the key ways to address these debt issues. But I and the team at SEMSE will want to urge government to show a bit of restraint and not rushing this whole privatization agenda, because if it is rushed, we may fail at the end of the day, because other countries rushed and fail. We need specific time. We need new laws, because the government has made us aware that they are likely going to merge NETCO and ECG and create certain boundaries. And within these boundaries, we zonalize and then resell power to these private sector participants. We need to address that. Have we started merging these two companies? The second part is that we also need to look at the commercial losses of these particular companies for us to be very viable and also attract the necessary investors in the sector. As a country, how are we addressing the commercial losses? I think that within the shortest possible time, government must be clear on how they are going to address the commercial losses and the already existing debt in the power sector. If you're able to address them within the shortest possible time, it means that those investors who might come in will be ready to commit certain resources in modernizing our system and also retaining the necessary revenue they are expected to retain. But if you are not able to address huge commercial losses, it means that some of them will come and take us for granted, because they are coming in without much investment, yet they are likely going to recoup huge sums of money from this particular sector, as it happened in 2018 with the PDS.
Are there lessons we can learn from other countries that have opened up their electricity distribution sectors?
Yes, as I indicated earlier, if you look at Morocco, Ivory Coast, and Kenya, which Kenya is doing partial privatization. If you look at Morocco, for example, Ivory Coast, for example, they gave what we call long-term concession. For example, a 50-year concession, and this particular 50-year concession allows companies to reinvest, and it also directs their mentality, because they may fear that government will take it from them. So any necessary investment that is needed to improve the system, they may not put it in. The other part of the Ivory Coast case also has to do with strong regulator without political interference. I think in years past, we've seen politicians interfering in the regulatory function of PURC. The act needs to be amended so that we ensure full independence of this particular organization. That also ensures cost-reflective tariffs to the end user. But if continuous interference by politicians, I don't think that we'll be able to achieve the success with this particular privatization. And lastly, too, we also need to look at generation, especially if you go to Morocco, for example, they look at the cost of generation, which is key. In Ghana, most of our generators are overpaying us. We even price some of these costs in dollars. And whenever there's macroeconomic instability, especially exchange rate instability, where the cedi begins to depreciate, it makes the cost of power very expensive. And we are not able to collect realistic tariff, which causes some form of debt in the sector. So we need to also address some of these challenges in the what we call the upstream or the generation perspective. We are able to address that. I think that in the long run, it will be a success and everyone benefits from this whole private sector participation.
I mean, you talk about political interference. I'm just wondering how we can stop that from happening. And what role should regulatory bodies like the PRC and Energy Commission play in ensuring accountability and protecting consumer interests after the company is liberalized?
I don't think government is going to fully liberalize ECG. I think that listening from them, they are going to do what the Kenyans did, which is partial privatization, or what the Moroccans did, which is also partial in a way, where ECG will maintain as a company, as the engineering part and also operational parts, what the vending or selling part of power goes to some private participants. But what we can do is to critically relook at the 738 of PRC, amend it, ensure full independence, especially even with respect to their constitution, the board constitution. If you look at it currently, it's directly under the presidency, and if an organization falls directly under the presidency, means that the president will have certain interference in there. We can even adapt the PIAC model, where we select board members from different organizations or different institutions to be part of this particular organization, and they will engender independence, because at the end of the day, they will want results, unlike what we have now, where it falls directly under presidency and presidency can decide whether to increase tariff or not to increase tariff. So we need to look at that. Now, with respect to Energy Commission, as I indicated earlier, for them to ensure accountability is to give us data. I think those days, Energy Commission and also Gridco and others used to give us real-time data on the power sector happenings, especially with respect to generation, distribution, and peak demand. Now they've stopped. So CSOs are not going to engage them well. I think real-time data will ensure accountability of the sector.
All right. Thank you so much for joining us. Executive Director of CMC, Benjamin Insi, appreciate your analysis. Good afternoon to you. We'll speak sometime soon. And that's for the exchange this afternoon. We are taking a short break. When we come back, we've got some more stories on the marketplace. All right, welcome back to the marketplace. Radford University College in Ghana has announced a new partnership with Galileo Global Education aimed at strengthening entrepreneurship and facilitating student and faculty exchange programs between the two institutions. The collaboration is also expected to pave way for the introduction of a Doctor of Business Administration program at Radford University. Speaking to Joy Business after a brief ceremony to formalize the partnership, President of the college, Dr. Martin Luther Obeng, described the initiative as a potential game changer for students preparing to enter the job market.
The partnership with ESG is an educational partnership for mutual benefit. Programs include undergraduate programs, master's programs. Then ESG itself is doing this DBA program. Now, Radford University College has been a unique university since our inception. We've been able to come up to the public space with programs that were hitherto not done in the private university or in the public university. Like we started degree in fashion design in Ghana, degree in physician assistantship in Ghana as well. This and many we have done, and strategically, as a private school, to be able to be relevant in the market space, you need to get partnership, you need to get yourself identify with some of the big players in the world to be able to do programs that will solve or fulfill the needs of prospective learners. And that is why we have just joined our hands with the biggest tertiary education network in the world, just to be able to do this.
Well, representing the Galileo Group, Professor Jose Henry Frederick expressed optimism about the partnership. He noted that the introduction of the Doctor of Business Administration program with Radford University marks the beginning of Galileo's broader vision for educational expansion across Africa. And that's the marketplace. More news on our website, nigeriaonline.com/business. Hearing of $150 million suit against Deloitte begins today. Also, Bank of Ghana considers price hedging program for gold exports. That's according to the governor. We've got more stories from the graphic business Stanbic breakfast meeting on our website, nigeriaonline.com. That's it. Thanks for watching. My name is Darryl Kwa. We are back same time tomorrow.